Hey everyone, welcome back to the channel. Today we're going to go ahead and take a look at PayPal. So we just did a video on Square and a lot of people, were, it seems, not happy with my valuation, saying a little too conservative. So figured I'd kind of look at PayPal as well and see how they stack up against, and maybe we'll dig into a few other payment processors. I know we already did Shopify, but I can't remember off the top of the head how I valued them. I'm guessing low and overvalued was how I viewed them. I think I might do a couple different payment processing companies, and then from there, kind of compare them and look at the metrics and look at the landscape, and maybe reevaluate some of my things if I've made some bad assumptions based off other things I'm looking at. But we'll see when we get there. So for PayPal, first video here, we're just going to look at their weighted average cost of capital. It's kind of the first video I always do, and PayPal actually comes in relatively kind of I think this is probably reasonable. They're a big company, a lot of revenue, 8.6%. I think their revenue was like 16 billion, if I'm remembering. Let me scroll up in their 10K real quick, and we can look. Oh, 21 billion, so even more. Pretty big size company. Was carved out of eBay probably 2 or 3 years ago, maybe 4 years ago at this time. I don't even remember, but so pretty big company, revenue based. Stock price doesn't seem to be super volatile in comparison. They have grown tremendously in the last year, right? If we look at pre-COVID, right, they're trading at under half of where they are, so at like 100, probably 100 and change, 110, 120 billion dollar market cap if you do some quick math there. So they've definitely accelerated during the pandemic, and I mean, just looking at the top line, they have seen pretty good top line growth. It'll be interesting to see if they break out the net revenue here for us, and if we can kind of look at that as a basis of transaction revenue versus other business revenue. So I wonder if this is just a shift to more e-commerce, and obviously PayPal being an integrated player there. But um, yeah, so we get an 8.6% weighted average cost of capital. I'll walk through it quickly, but market cap about 308 billion, market value of debt 9 billion. This comes from their 10K. Page 101 has this, and you can, if I scroll down here real quick, you'll notice it doesn't quite tie to the balance sheet. They just have like one adjustment for the amortized principal, or like what they've paid off. Basically, they have this like adjustment, unamortized premium is what they call it. So 61, right? So 8939 is what's going to tie to the balance sheet. I don't know how to spread that out. You could split it out. It's so small, it's immaterial. So I just went with the 9 billion that they give us up here. So 9 billion, you get your interest rates, right? So there you can calculate total debt, cost of that debt, and then equity. We're going to use CAPM, Treasury yield link here, expected return on the market, 8% comes from Investopedia, and then the beta we calculate. If you haven't seen how to calculate beta, I do this in all my videos. You can also just pull it here, right? So Yahoo says 1.16, our beta comes out to 1.14, roughly there. But to calculate it, you're going to go historical data, set this to, 5 years, monthly, apply, download, drop in the adjusted close here, calculate the daily change, and then you're going to do the variance of SPY and then the covariance of SPY and PayPal. And then you divide those two and you get the beta. So good thing to know how to do. For companies that have been around for a while, it's not super relevant because you could just pull it from Yahoo Finance. But for a startup or something, like if we take what's like a recent IPO, Roblox, right? There's going to be no beta because Yahoo only provides a 5-year monthly. But if you know how to calculate it, you can go back and calculate a beta based off the first 3 months of trading. Obviously not super great because it's not a long time frame, but better than nothing. So anyways, we get an 8.6% weighted average cost of capital, and we'll jump in. We'll probably do a video actually just going through their 10K and looking at the revenue next, and then we'll try to pull it all together. And I might try to look a little bit more at the broader market in this video, just because it seems like a lot of people had very different opinions on Square. I feel like I'm usually conservative, and people probably disagree, but it seems like with Square, a lot of people were like, "You're completely off base." So maybe I was. The payment processing industry, I've looked at Shopify and some other things, but from a fundamental standpoint, it doesn't make a lot of sense for me. But I guess if we looked at the broader e-commerce growth, if we're expecting tremendous growth from that aspect, and then higher inflation, right? So just cost of goods are going up. From a consumer standpoint, maybe my growth rates were conservative and we'll see a lot higher growth than what we've captured. So um, we'll get to those in the coming video. So thanks for tuning in. Let me know if you have any questions or comments, and look forward to making a couple more videos for you guys. Thanks.